Hey, everybody, Dave Dubeau here with another episode of the Property Profits Real Estate Podcast. Jim, don't try to say that three times too fast. It's confusing. And my special guest today is Jim Pfeifer, and I'm excited to be talking with Jim. I'm always excited to be talking with our guests, but Jim, I'm really excited about because this is going to be something completely different. Because you see, Jim is coming to this podcast not as an active real estate investor, but as a passive real estate investor. And Jim has a lot of experience investing in real estate passively. So he's kind of like one of the guys we're looking for to invest in our deals. Now, Jim typically invests in bigger deals and syndications and these kind of things. He's been in and around real estate for quite some time, in and around financials for a heck of a long time. In fact, Jim, correct me if I'm mistaken, but I think you were in the financial services industry for quite some time. Is that correct?
Yes, I was a financial advisor, and prior to that, I was in business finance. My whole career basically.
So you're a number crunching kind of guy.
Yes, sir.
Yeah. All right. Fantastic. Now, here's the cool thing from our perspective, you guys. Jim has invested passively in over 45 different deals in one way or another. So what I'm really wanting to get out of our conversation here, Jim, aren't all the wonderful deals that you've invested in, but the pain in the ass people that you've invested in and what some of the biggest mistakes are that you see active investors like us making with our investor partners, people like you. What are your biggest peeves? What are the biggest mistakes you see? What are the biggest challenges you've had to deal with as a passive investor? Or I know you've got you do a whole podcast on this, so you know a lot of other passive investors. So is it okay if we just kind of take a dive into the big screw ups people are making?
Yeah, absolutely. That sounds great.
Awesome. Well, yeah, it'll sound great if we can avoid making those screw ups, right, with our investor partners. So what would you say would be the number one thing that people just screw up when it comes to working with investor partners?
In my experience and in the experience of our community, it's communication. It's poor communication. And a lot of it, as we were talking, it sounds trivial, right? Someone not responding within a meaningful amount of time or not responding the correct way. But, for a passive investor, all the work is done up front. Right. Yeah. I'm very active when I'm screening the sponsor, trying to understand the deal and all that. But once I send in my money, then there's nothing left for me to do except hopefully get reports and get distributions.
Nothing for you to do but worry about your money,
exactly.
At least initially, right? Yeah.
Right. And so communication is the key. And one of the things I test sponsors and I make sure that before I give them my money, that they are going to respond to me in a meeting, in a certain amount of time. I like to be 24 hours, but if it's longer, I understand if there's a reason, but I like someone to communicate with me clearly and in a timely manner. Because, what I say, if you're not going to communicate or respond to an email or a phone call before I give you my money, what are you going to do after you've already had my money? Right. And those are the things that have been most frustrating when dealing with sponsors and deals, especially if a deal goes bad and you have a sponsor who already hasn't been communicating. Well, if they have bad news to communicate, they're certainly not going to tell you. So the number one thing that bothers me and bothers the investors in our community is poor communication or slow communication.
Poor or slow communication. Yeah, that makes sense. So what's the converse? What's the other side of that? What does good communication look like to you?
It's really just, we do a lot over email. I might have a question or two, and it's just a quick response. And you either say, here's the answer to your question, or if you have a team, you reply right away and say, so-and-so will get back to you quickly. Or you just say, hey, look, I'm in the middle of a deal right now. I'll get back to you in a couple of days. Just something that the immediate response sets it up so I know that you've read it and I don't have to diary it and worry about following up. And my favorite sponsors are the ones that I know they're going to get back to me immediately. And the quality of response is also something that, you want a high quality response. You don't want just a blow off response.
Right. And to me, it sounds like you're probably a very astute investor. I mean, you've been in the financial industry for many, many years. So kind of the level of detail you're looking for might even be greater than a lot of other people's. Would that be?
And it could, yeah, it is at the beginning. So, I have different relationships with different sponsors. So there's a sponsor that I use that they send out a deal. And when it comes out, I hardly even look at it. And I just say, I'm in, because I've been in a bunch of deals with them. I know how they communicate. I know what their deals are like. I know, I just have experience with them. So I don't need to test them anymore. I don't need to do all that. But when it's a new sponsor, I'm kind of a pain, right? I ask questions. Our group, our community is called Left Field Investors, and we have some tools that we use. We have a deal analyzer. And, if I've screened the sponsor and I'm comfortable with them, and then they send me a deal, I put it in the deal analyzer and I'm looking for red flags and questions to ask the sponsor. And so what I'll do is I'll send them an email with, 4 or 5 questions, and I'll test them. How quickly do they respond? And do they respond with full information? I had one sponsor who said, hey, we just did the webinar, go look there. And I, that was not acceptable to me. I said, I want you to answer these questions. Sure, I will watch the webinar, but part of this is I want to see if you know the deal like you should know it. And then once they respond with those answers, every time I will ask additional questions, because I want to see, are they getting tired of my questions? Are they still going to answer them? Are we going to have a dialogue about the deal, or will they get frustrated and say, you know what, I have other investors who don't ask questions. I'll just go, do business with them. And if that's the case, that's fine. But I want you, and I'm not going to do that every deal. But, I had a conversation with a sponsor the other day who was very appreciative of my questions and digging and looking for more information, because they wanted to prove that they knew their deal. And that's the kind of person or sponsor or entity that I want to invest with.
Yeah, that makes a lot of sense. Now, when we were talking off camera, another thing that you mentioned that gets under your craw is people over promising, or some of these red flags that you see when you're doing your due diligence. So what are some of the things that you've seen that have turned you off of deals?
Really, it's if the rent growth is too high in year one is a great example, right? If you say you're going to get 8% rent growth, that's not happening in year one, right? All the leases go off at different times. It's not even possible. So just be realistic. If you think the market is, can get you 8%, that's fine, but that's not going to be from day one when you buy the property. So things like that, or understating vacancy. There's a lot of metrics that we look at to make sure that, it all looks normal. And then the over-promising part is also in returns, right? Not just the amount of returns, but the timing. If you say, this deal is you're going to start sending out distributions 6 months after the investment, then send them out. And if you don't, this is the big part. If you don't, contact us and say, here's why, right? I'm okay with bad news. If you say, look, we couldn't get there after 6 months, we had these issues. If you explain them to me and they make sense, fine. This is a risky business. I understand that everything isn't going to go exactly to pro forma. But if you promise something, you either need to deliver it or you need to explain why you didn't.
Well, it gets back to that communication thing, right? It's
Absolutely.
not, it's easy and fun to communicate good news. It's sucky, not as much fun, that's for sure, to communicate bad news. But what you're saying, which is absolutely true, is even more important to communicate more when it is bad news, not stick. I know a lot of people have the tendency to kind of want to stick their head in the sand, the ostrich thing, and pretend nothing bad's happening in the middle of bad news. But that's the worst thing you can do, right?
Right. And it doesn't even have to be that the deal went bad or anything bad is happening. There's plenty of times when you say, hey, we usually try to get distributions out in 6 months, and something happens, a pandemic, or things that are out of your control. So whether it's in your control or out of your control, it's not going away, right? If you say 6 months and it doesn't come at 6 months, you can't just ignore me and think I'm going to be okay that it's 3 months late, right? Mm-hmm. But if you explain it to me and you're upfront, and then after 4 months, you say, hey, you know how he said it was going to be 6 months? It's not going to be 6 months. Okay, now I'm prepared. Now I'm not waiting for that bank deposit at 6 months. I know what's happening. It's just be clear and communicate efficiently. And even the bad news, investors can deal with.
Yeah, that makes a lot of sense. So talk to me a little bit about responsibility and excuses that sometimes you hear from sponsors.
Well, the pandemic was a great time for excuses, right? So I had several deals that the sponsors stopped paying distributions in January or February and of 2020. And when we got, when I was starting to communicate with them in March, April, asking them what was going on, they said, "Oh, pandemic." But you stopped paying distributions before the pandemic. So,
Yeah.
Again, it all goes back to what I said before. If things are going south, just be clear and communicate it. Take responsibility and say, yeah, you know what, this isn't just the pandemic's going to make things worse for sure. But, things were going south before that. You're right. You can't hide behind something. You just have to be honest. And if you're not going to be honest and accept responsibility for your mistakes or the deals that aren't working out as well, then, I'm not going to give you credit if a deal goes great, because if you're not willing to take responsibility for the bad deals, you don't get credit for the good ones, right? Then it's all luck. And if it's all luck, I'm not investing with you. Mm-hmm. So it all comes back really to communication, the responsibility. Don't overpromise, but really just let us know what's happening. There's a deal where someone, the guy said it would be paying out 2 years ago. And it's like pulling teeth to get this guy to respond to me. I have to call him, send emails, call other people in his business, and he just ignores it. But I know he has email because he keeps sending out these, his blog about how great, the economy is, or this is, or whatever. But his deal is horrible. It hasn't done anything like he said it would. And he does not respond. And that I will never invest with him again. And, anyone in my community who asks me about him, will say, look, I wouldn't invest with these guys because they just poor communication.
Yeah.
And it, like I said, it sounds like a small thing, but it's everything.
That's a fascinating idea. Hold that thought for a second. Hi there, this is Dave Dubeau, and real estate investors hire me to raise capital the right way. Why? Because most of them are stuck with too small of a portfolio, and they don't know how to attract investors and raise money for their deals. So I help them to connect, capture, and close their ideal money partners. Bottom line, when you've got a deal, you're going to have the capital to do it. So go ahead and book a no-cost capital clarity session with me at bookachatwithdave.com. Again, that's bookachatwithdave.com.
So, Jim, let me ask you this. Have you been involved in a deal where the sponsor has screwed something up, right? They messed up, they made a mistake. They did a good job with the communication, letting you know what was going on there. What do you expect somebody to do under that situation? Like,
yeah,
we talk about the importance of communication, taking responsibility. What are you looking for in those kind of negative communications?
So there's a good example that I had last year, or this year actually, with K1s. I had my last two K1s to come in from deals.
So just remind people what K1s are, please.
Okay, sorry. So a K1 is the tax document you get from the LLC that owns the property. It passes through the taxes to you personally or however you invest. So, they have to produce them hopefully by March 15th, March 31st, and they should be to you well before April 15th so you can file your taxes.
Got it.
You can't file your taxes without these K1s. So they were late. And, this year, the pandemic, everything threw everything off. So I was okay with that. But one person sent me an email every week saying, here's what we're working on. Our accountants have it. Here's what's going on. We're going to fire the accountant, but we can't do it yet because they're almost done. They told the story, and I didn't have to follow up with them because every week I got an email saying, here's what's going on. And it was sent to everybody, right? Mm-hmm. So they acknowledged the problem, they understood it, and they talked to us about it. The other person, I had to follow up every week, what's going on with K1s, and they just kind of ignored it or said, oh yeah, they're coming, don't worry about it, they'll be there, or you don't need one, or, came up with all these excuses. And, I really like that sponsor, but now I'm very hesitant to get into any new deals. Now we had a conversation after the fact, after I got all the K1s, after the rush of everything was done. And I said, this isn't acceptable. I really like how you operate, except for these issues. And so since then he's hired additional staff, he's fired the accountants, he's got new accountants. So, I'm giving him another chance, but it would have been so much better had he up front done what the other guy did, which was acknowledge the mistake. We're working through it and just keep communicating. It's really just keep communicating. It's a lot of money that we're investing with you. And, you should be open to telling us what the status of the deal is.
Yeah, for sure. Sounds like really for you. And now, would you say these are common challenges you've seen other passive investors facing as well?
Yeah, absolutely. We have at Left Field Investors, we have a forum where people can go in and just, talk about sponsors or deals or issues. And that's really one of the biggest things we talk about is this sponsor we like because they're upfront and communicating, and this one, not so much. And there's so many sponsors out there that if I send you an email or give you a phone call and you don't respond, I'm just going to move on. You're not the only one out there. There's other people that do just as good a job as you do, and they want my money just like you do. And if they're going to, respond to her, because really, when you think about it, there's no way for me to check on my deal, right? Once I give you the money, it's 3, 5, maybe even 10 years before I get the capital back and the deal closes. So there's no other product that you're sending me other than distributions and communication. So, and the distribution is a communication also. So if you don't get that right, then what are you doing? Yeah. Right? You're not going to get my money a second time. And as a sponsor, I think you need to realize it's not the first time that you want me to invest. It's the second and third. And then you want me to go to my community and say how great you are. And now, we have sponsors who have 10, 15, 20 different investors from our group that are in 3, 4, 5 deals. Mm-hmm. Well, guess what? Those are the ones that everybody says, wow, they send distributions on time. They send reports on time. They communicate well. If you ask them a question, they answer it. Especially for someone new who just did their first, deal and sent someone 50 grand and then crickets. They don't hear from them in months. They're not going to invest with you again. So It's all about, if you want repeat business, you're going to have to be upstanding and honest with your communications.
And regular.
Absolutely.
Okay, let's say things are chugging along all right with a deal, like everything's miraculously going according to plan. What kind of communications are you expecting and looking for and hoping for from a sponsor, from the deal maker?
Yeah, just some send it monthly, some send it quarterly, but just a couple paragraphs on how is it going? Is it, you said you were going to do, pave the parking lots. Have you done that? You said you're going to change monument signs. Did you do that? Are you getting rent increases? All that kind of stuff. Just a brief summary. I don't need a whole bunch. I'm not going to dig into it. And if you're sending me the distributions that you said you would, then I don't need as much information, right? If everything is going according to plan and I'm getting that, distribution every month, then I'm curious, but I'm not as curious. If I'm not getting the distributions or they're late or they're not the same every time, then you need to communicate that, right? If you haven't sent out distributions in your summary, you need to say, okay, we're still on track for distributions in August of 2021 or whatever it is, right? So again, it really it all keeps coming back to communicating.
And whatever the expectation was and the agreement was up front, right? Because, if and different investors have different thresholds of how much communication they want. It sounds like you're very front end focused, right? You want to make sure that the deal's set up right in the first place and everything's hunky dory and that you've vetted your sponsor up front. And then if things are going according to plan, you're getting distributions on a regular basis, then you don't need as much communication. It's whatever you guys agreed upon at the beginning. So if it's quarterly reports, great. If it's monthly little updates, great. Whatever that is, make sure you live up to it.
Yeah, that's absolutely correct. Like I said, I don't really need a whole bunch of reports if you're paying out like you said you would, but I still like at least every quarter for you to say, hey, the property's still standing. We're still doing well,
Yeah, that's nice. Yeah. Maybe a little picture of yourself to the peace sign in front of the property. Yeah, right. That sounds great, Jim. Have you, just out of curiosity, I know you've invested in a lot of syndications and whatnot. Have you ever invested in any smaller deals, like with individual investors, like single family home type stuff or really smaller type properties before?
Yeah, I was an active investor before I did the passive stuff. So I owned, single family turnkey properties. I owned a 4 unit, an 8 unit, a 22 unit, and I did all those on my own. But now since I have some contacts from the active side, I'm still always up for partnering with someone, a smaller operator, but it's got to be somebody I know, like and trust. And also I don't want to be active. I'm fine to provide some of the capital, but I don't want to manage the property at all. I did that. I didn't like it. not my
That's why you're a
strength.
passive investor, right? That's
Exactly. So I'll be passive, but I'm open to any kind of deals.
No, I'm just curious. So what recommendations would you have, if anything different? Would there be any different recommendations for smaller operators versus, sponsors per se? Like a smaller operator, let's say you're doing a long-term buy and hold type deal with somebody doing single family homes and you're the money partner in that deal. Any different advice, any nuances that you would give for those smaller operators?
I think I would want more information more frequently because, they're probably not as professional, meaning they don't have all of the systems in place. They probably don't have all of the staff. They're smaller, right? So I'm going to want to make sure that they know what they're doing and make sure that the project is going according to plan. So in there, I would probably be less passive while the deal is going on, not meaning I would want to manage stuff, but I would want more frequent reports because presumably, it's a smaller deal. So for me to do it, I would probably have a bigger chunk of the overall, deal. So if I'm a normal sponsor, professional sponsor, I might be 0.5% of the deal, but if I'm doing it just with one, a smaller person, I might be half of the deal.
Yeah, you're 50% of it.
And so then I'm certainly going to want more information as the deal is progressing, more updates, and it's easier that way because I can also just, it's a closer relationship most likely because there's fewer investors. So it should be easier just to get on the phone and say, hey, how's the property going? And then, I might also offer some advice or input where, on the major syndications, I don't offer that and they don't want that.
They don't want it.
And I'm fine with it. I'm fine with that.
Awesome, Jim. Well, this has been fantastic. I really, really appreciate your insights from the other side of the table as a passive investor yourself. And if people want to find out more about your podcast and your community, what should they do?
Well, our podcast is called Passive Investing from Left Field, and our group is called Left Field Investors. So you can go to leftfieldinvestors.com and sign up to subscribe, and you'll get the information about our podcast and everything else that we have. If you want to contact me directly, my email address is jim@leftfieldinvestors.com. And I'm happy to talk to, active investors, sponsors, if they want to hear my side of things. And I'm always looking for passive investors who want to be part of our community.
Very, very cool. Where does the name come from, Left Field Investors?
Well, it's funny. So we were looking for a name. And when I was a financial advisor, all of my colleagues would think I was way out in left field because I was investing in alternative investments. And that term drives me crazy because it's the place you live. It's the place you go to
real
buy
estate
stuff.
is an alternative investment.
Yeah. So they always thought I was out in left field. So that's how we came up with the name.
Nice. I like it. Jim, thanks so much. I really appreciate it.
Thank you. Thank you for having me on.
My pleasure. All right, everybody, take care, and we'll see you on the next episode. Well, hey there. Thanks for tuning into the Property Profits podcast. If you like this episode, that's great. Please go ahead and subscribe on iTunes. Give us a good review. That'd be awesome. I appreciate that. And if you're looking to attract investors and raise capital for your deals, then I'm going to invite you to get a complimentary copy of my newest book. Right back there. There it is. The Money Partner Formula. You can get a PDF version at investorattractionbook.com. Again, investorattractionbook.com. Take care.